Welcome back and thanks for joining. Today we're going to talk about revolving lines of credit, what it is, the benefits, some of the features, and at the end I have a warning that you should know. So what is a revolving line of credit? I'm just going to try and break this down and keep it really simple. But what a revolving line of credit is very simple. If you get approved for, let's just say $100,000 to use even numbers, and you borrow $10,000, now you have $90,000 remaining. A great thing about a credit line is if you pay that $10,000 back, now you have a full $100,000 remaining again. So basically a credit line, it works very similar to a credit card. You get approved for a set amount of money. As you use that money, you have less available. As you repay it, the original amount is available again, or whatever amount you paid back becomes available. So very simply, in a nutshell, you can draw, repay it, and then repeat that process all over again. So as you pull money and draw down on your credit line, as you repay it back, that money becomes available again. As you continue to keep pulling, the less and less amount of money that you have available. So some of the benefits of that are, one, you only pay for what you use, which is great. If you get approved for $100,000, you might not need all that money. That's okay. You only pay for what you use. So if you get approved for $100,000 and you only use $10,000, with most lines, you're only going to pay on that $10,000. So it's a great thing to have for your business and really gives you the flexibility to use money when you need it. If an opportunity arises, you can pull that money, on demand and go take advantage of that opportunity. If an issue pops up in your business or an unexpected challenge, maybe you're supposed to get paid for a few jobs and that wound up getting delayed and payroll's on Friday, well, you can pull from that line, pay your payroll, and get paid in your job next week, and it's okay. So some important features is every lender has different guidelines for their credit lines. Some cap out the dollar amount, meaning they'll only do credit lines of $50,000, $100,000, $200,000, and so on. Really getting with the right lender that can meet the needs of how much money you're looking for, the size of the line is going to be super important. Every lenders have different rates, and usually depending on a number of things about you and your business will make up the rate and the cost. Some lenders collect payments back on a monthly basis, some on a weekly basis, some on a bi-weekly basis. So, understanding what the terms are and how the collection process works is really a good question to ask and something that's super important to know. Some lenders only work with certain industries, so to not waste time, you really want to make sure that whoever you're working with will be able to work with your industry. Otherwise, you're just wasting time and going to apply for absolutely no reason. And every lender, again, has different interest rates, so it's really important to know what the rate is and make sure it makes sense for your opportunity. Some other features that you're going to want to check are some charge interest on a daily basis, some charge interest on a monthly basis. Meaning if you pulled $10,000 from your line and only had it out for 10 days, some lenders will charge you interest for that 10-day period. Some lenders will charge you for a whole 30-day period. So even if you only pulled it and used it for 10 days and repaid it back, you might be charged interest for a full 30-day period. So it's definitely something you want to ask, and depending on how you're going to use the line, that may make a difference or not. If you plan on using it and paying it back constantly, that could wind up turning into a pretty big unexpected expense. So it's definitely a good question to ask. So how and where to get a revolving line of credit? There are a number of different options out there. Some lenders require that you have real estate as collateral. There are many options where you don't need real estate as collateral, which is great. There's a lot of business owners may not have real estate collateral that they want to use. So it's important to know that up front so you don't waste time. But typically what we would do with a client that comes to us, we would have an upfront conversation, go through a few simple questions, really understand their needs, what they're looking to get accomplished by using a revolving line of credit. And then from there, we have a very simple one-page digital application that we would send out to our customer to complete. And then usually we're going to look at the last 3 to 6 months of cash flow, usually via your bank statements. The line's bigger than $150,000 to $200,000. We may ask for some recent financials and maybe a tax return. There are products out there that don't require a tax return at all or any financials, which is great. There are some revolving lines of credit that are out there that work with challenge credit, and there are some great products out there that are very beneficial to people with excellent credit. So you really want to make sure that you're working with someone who has the capability to offer a number of different revolving credit line products and options across a number of different lenders to ensure that you're going to get the best approval for you and your business and your credit criteria. So as mentioned earlier, one of the warnings that I have is, you want to really make sure that you don't overborrow. So sometimes when you come across maybe an opportunity or even a challenge in your business, you might not be exactly sure how much you're going to need. If it's a challenge, it might be a temporary one, but you're not sure how long that's going to last. So determining how much money you need, you might just not know. You also might be going into a renovation and think that you only need, or think you might need 100,000, you only wind up needing 50,000. So it's really important that you don't want to overborrow. So sometimes when you do a term loan or a small business loan, you have to borrow a set fixed amount of money up front, and then you're responsible to pay that money back and the interest back. And even if you pay it back early and get maybe an early payment discount, or didn't have to pay back the total amount, you still were paying interest on that initial amount of money that you took out. So the benefit of having a revolving credit line is that you only pull what is necessary and you only pay for what you use. And another great thing is you really want to make sure that you have a credit line that can grow with your business. As your business grows, you're definitely going to want to work with a lender that can grow that line with you. And as your business grows, usually you wind up needing more money to grow. So it's really important that you're partnering with the right lender that can help that grow with you. If you'd like our help or have further questions about revolving lines of credit, please check out the link below, and we're more than happy to help you. I really appreciate you watching my video, and please subscribe, and I look forward to seeing you again. Thank you.